Good evening, traders. It is Sunday, June 23rd, and it is time for our Sunday video. We're going to take a look at some of my recent picks. That's how I like to start all the videos off. This is a systematic trading approach that I'm trying to teach you. The best way for me to do that is to first gain your trust. And I do that by showing you the picks that we had previously. I tell you how they did. Then we go do some market analysis, and then we find new picks. So one of the most recent picks that I had was a week ago Sunday. BABA was the stock that I showed you. I like this as a short. You can see how the stock has been pulling back, and it has easily fallen through the major moving averages. Weak relative to the market. Right now, my market bias is neutral, but I am kind of a little bit on the bearish side only because I think on a short-term basis, that's where we're going to find some better opportunities because the market is struggling to make new all-time highs. We're going to talk about that in just a minute. In any event, what we wanted to do is we wanted to see some signs of a market crackdown. I was looking for a better bearish engulfing candle on the SPY, and that's the chart that you'll see running in the background. And this was a bit of a bearish engulfing candle on Thursday, but I would have rather seen something long like this. We're going to get into that in just a minute. So this is not really the sign that I was hoping for to tell me that yes, a short-term market top is in, and that's what we needed to wait for before we would take a bearish position. If you recall, a week ago I was talking about buying in the money, put options that had at least a month left until expiration, but we needed that first long red candle on the market. So we're still in a holding pattern. I do like the fact that the stock's been weak relative to the market. It's below AVWAP-E. It's below the 200-day, the 50-day, and the 100-day. You can see that it has been compressing on its low when the market has done what? The market has continued to move higher. This is relative weakness. Stock has not been able to get off the deck. Market is marching higher. If we get this little market pullback that I believe we will in the course of the next 2 weeks, 3 weeks, then this stock should easily move lower because even with a market that's been going higher, it has been shedding some points. So get a little market tailwind to the downside, this stock should be able to come down and test this upward sloping trend line somewhere in the $70 price range. So I still like Alibaba, but I will like it better when we get that market crackdown. And another pick that I made last Tuesday during a live event with one of my members, Rajul, I hope that you were able to watch that live event. And the stock that I highlighted was NET. And NET is currently trying to fill in an earnings gap. And here we can see there's the stock. Whoops, sorry about that. The stock had pulled back after reporting earnings. And then you can see how it was challenging this 200-day moving average. Now, the instructions that I gave all of you was that we were not going to take a position in NET until the stock could close above that 200-day moving average and the 50-day moving average. It hasn't done so yet. So what I'm going to do is click GTC. I'm going to click on the top of that candle right there. And now I have a GTC alert set so that if the stock can close above this point right here, I'm interested because then it will fill in some of this gap and it's likely to drift up to the 100-day moving average. You can see we've got some horizontal support right in here. Was support, was support, was support, now resistance, now resistance, now we're through it, now it becomes support again. So it's gotten through that technical level, it's got a couple of moving averages to move through. If it can do that, I like it, especially on a short-term basis, on a day trading basis. When the market's doing absolutely nothing, I'd like to see it close above that 200-day moving average on heavy volume. If I get that, then I know that buyers are interested at this level. So you can already see I'm doing, mix of longs and shorts. I'm looking for day trading opportunities. I'm not going to be placing any big bets right now. Why? Well, because the market's been floating higher on light volume, as you'll see in a few minutes. I'm going to talk about the price action that I'm seeing in stocks also. MU, this was a stock that I highlighted on Thursday. I did a live event with Harry, and I noticed this gigantic bearish engulfing candle. Now, when I talked about the bearish engulfing candle that I'm looking for the market, this is the kind of candle I would like to see. 2-3 times the normal ATR on massive volume. Right? A little bit better volume. Massive volume. That tells me that there are lots of sellers. And you can see here, I'm going to take the LRSI off because it's obscuring the chart a little bit. But you can see how heavy the volume was all through the course of the day on this big drop. I think I shorted the stock during the live event somewhere around the 145.15 level, if I recall correctly. And you can see how the stock was down pretty dramatically on the open Friday. Lost at least 5.5 points. Very nice trade. Now, I wouldn't hang on to MU for a long period of time here. This is just going to be a little flush out, but still a pretty meaningful bearish engulfing candle. So you look for a little bit of follow through. And this is one of the exceptions during the live event I had mentioned to you. I'm going to show you a trade that is not within the system that I teach, because typically when we are in the upper right hand corner of the chart, we want to be buying. We can see a red E here. If I hover over, it shows us that earnings are on 6/26. So it's going to be releasing earnings this week. That means if you're in this short, take your profits on it, go to the sidelines. Let's see what the earnings report is like. But this is a very strong trend that we don't want to fade. Normally, we're going to be buying dips like that one on a stock like this, and that'll provide us with a good entry point. But I did see that we're starting to get into some profit taking. It was heavy selling volume off of a new all-time high, and that is a good short to take that will last at least a day or two, maybe 3. And then you take your profits, you get out, and then you have to evaluate what the stock does. Oftentimes, the stock will form a base, and then you'll see a new all-time high. There are times when the stock will pull back, and the depth of this pullback off of a relative high like that, if it's fairly prolonged and fairly deep, let's say that it gets down to AVWAP-E, okay, that's a pretty substantial dang pullback. That tells me there are some real profit takers in the stock. Then what I start looking for is a meager bounce that can't get anywhere close to that previous high. And then I want to see the stock roll over again. That gives me a double top lower high. Then, and only then, would I consider taking a swing short. So this is a day trading short. So those are the picks that I've had recently. Alibaba, it's done all right. I wouldn't be taking that short yet because the market hasn't set up for it. NET, we're still waiting for it to get above that 200-day moving average, the 50-day moving average, so it hasn't really gotten above those levels and closed into the gap. If it does, I think it's going to set up very well for a day trade or two. And then we had Micron, which was actually a very nice pick as well. And so what's got me, I don't even want to say skittish, just cautious. I just not engaged in the market right now. I'm largely in cash because I feel that as the market drifts higher on light volume, we're going to get a dip in the next 2 or 3 weeks. So I'm focusing more on day trading from the short side. And the reason for that is that when I've noticed stocks, we can even take Micron for instance. So let's say that you buy some Micron in here and you're excited. You've got a nice little horizontal breakout here. Everything looks good. Stock's starting to advance and you're all excited about it here because you're starting to finally make some money on the position. And then along comes Thursday. And the price action before that has been 3 steps forward, 2 steps backwards. 3 steps forward, 2 steps backwards. Fighting, 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 trying to get higher, struggling to get higher, and then blam, all of a sudden your profits are gone. That's what it's been like trading from the long side. So yes, there are stocks that I like on the long side. There are stocks I'll day trade from the long side. They include Amazon looks good, Google looks good, Microsoft looks good. I mean, there are a handful of the big mega cap stocks that still look good, but it's a constant struggle to advance. Even Apple looked fantastic. And then it's been shedding a lot of its points recently. So if I put up Apple, you can see everything looked good with Apple. And then it just turned to mush 3 days in a row of pretty decent selling. I mean, this has been a really nice rally for Apple. Now it's testing some of these longer term high plus trend lines that it's been able to break out through. And if those start to fail, you could see a failed breakout with Apple pulling back. This is not the stock that I'm going to highlight today, but on a day trading basis, yeah, there might be some opportunities to short Apple because this is a very toppy formation. Market continuing to go higher, stock not able to advance, 3 long red candles off the high. We take out the open from this last long green candle, starting to test some of those high plus trend lines. Yeah, I could easily see Apple continuing to pull back. And this is classic. This is exactly what I'm talking about is on the way up, you just fighting to just get ahead and then blam, those gains are stripped away in a big hurry. So let's take a look at the market one more time. And we've got a light volume rally, April, May, most of June, very light volume. That is not bearish. It simply means it's like a plug your nose and buy environment. Asset managers don't want to chase the market at the all-time high, and the path of least resistance is upward. So the market's floating higher, but there's no conviction because there's no volume. There's not one asset manager who feels like this is their last chance to catch this big rally. They just don't feel that way. That's why the volume is very light. So we've got a little bit of volume coming in with triple witching. What lies ahead? Well, this week we have durable goods orders. That is typically a great big nothing burger. Okay, the market really doesn't trade off of durable goods very much. Volatile number, great 1 month, sloppy the next. The other number that we get this week is GDP. Well, this is our third look at GDP. The only one that really matters is the advanced reading. That's the one where you get some price movement off of it. Okay, well, so that's not going to do much for the market. We've got some Fed speak. Who cares? The Fed just had their FOMC statement, and they basically said that they're in a great spot right now. They're going to keep interest rates right where they are. They see some signs of a softening economy. They also see that inflation's starting to come in. They said, hey, you know what? If we see further signs of economic weakness, then we'll be ready to ease. If we need to cut, we will. But right now, we don't see the need to do so. So we do have another event this week, but I don't think it's going to generate much in terms of market movement. We've got the first presidential debate Thursday evening. So I don't see that as really moving the market at all. Earnings season is behind us, so we don't have that catalyst. There's nothing to drive the market this week. So got a little bit of window dressing coming up this next week. That means that you could see a little bit of price movement, but again, not a huge driver. So I believe we're going to be seeing a fairly quiet week. We're likely to see tiny bodied candles, and the market's going to try to inch higher, but I think the headwinds are going to be blowing, and I don't think the market's going to make much of an advancement. But the one thing that I would caution you on, and the one thing that you should be looking for, is a gap up that gets faded and faded hard, just like that. Sell, 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 sell. And we'll take a look at Thursday's price action, because Thursday was not the type of price action I was looking for that type of top. So let's go in and take a look so I can describe what is it exactly that we're looking for. This is Friday's price action. This is Thursday's price action. So you get this gap up and you see this selling right in here. Well, when you start getting selling like that, we don't want to see a bounce with mixed overlapping candles, and then we kind of flounder around, and then, oh, here we go. Here's some nice candles. No. This is not even remotely what we're looking for. I'm looking for a gap up, perhaps even a little bit of a move higher off of that gap up. And then when the red candles start, it's going to be long red candle, long red candle, red candle, red candle, red candle, red candle, long red candle, long red candle, massive volume, no reprieve, relentless selling. Relentless selling. It's critically important to understand this. This is mamby-pamby, go nowhere price action. Mixed overlapping garbage. Buyers and sellers are in there. Programs are running. Sell it, buy it, sell it, buy it. It's just a mishmash of activity. This is not what we're looking for. What I'm looking for is asset managers, proprietary trading firms who say, I am willing to take a stand right here and right now, and I am happy to reduce my risk exposure in the equity market. And that's when you get these long stacked candles consecutively, like 2 hours worth, not 3 5-minute bars, 2 hours worth of steady selling on massive volume. Okay, that's what I'm looking for. And once we have that, then I think the market sets a short-term top. I'm not looking for a big pullback, and I'm not taking my eye off the prize. I'm simply going to cash right now because I think we're going to see that type of formation. I think that's going to set us up with a little bit of profit taking and a little drift lower. But ultimately, what I'd like to do is I'd like to have the market pull back, find support, and then off of that support, like right here, this little pullback, that bearish engulfing candle sets up a week's worth of weakness, bullish hammer, right here. This is where I'm interested. This is where I can spread my wings a bit. This is where I can get aggressive. This is where I can buy some stocks, some really strong stocks during this dip that did not pull back at all. And that tells me that as soon as the market finds support, those are the ones that are going to be leading the charge higher. But without that market pullback right now, here you are trying to buy these stocks that are grinding and floating, and they're making these marginal new highs, and it's, as I mentioned, 3 steps forward and 2 steps backwards. You're just waiting for the rug to be pulled out from under you. And here's another example in April of a bearish engulfing candle. So if you have access to the 5-minute chart from April 4th, please go back and look at it. Those are the types of stacked red candles that I'm talking about. That's the type of selling pressure that I'm looking for. And then you get a decent little pullback. This is where you are aggressive. So your whole mindset right now for the rest of the summer is you are hoping that we get a pullback like this, because this is where you're going to be aggressive. Test that support. This is where you can add to the position. Through resistance, this is where you can add to the position. But up here, you're vulnerable to a pullback like that. And that would flush you out and it would crush you. So you should not be overly long right here. Now, I am neutral, looking for a dip. Why am I so dang bearish? Why am I looking for bearish picks? Because if I see this pattern right here, then I'm going to have a pretty good setup for the next week, maybe 2 weeks. Make a little bit of money on the market pullback, and then I'll be looking to get long. But what I'm not going to do is to get long a bunch of stock up in here when I know that we're at the all-time high. Asset managers aren't happy here. They're not chasing stocks. They're not feeling like they're going to miss the next big move. I want that dip. That's all I'm waiting for. So in the meantime, I want to have some bearish picks ready so that if we do get the dip, I got something to look at while the market is pulling back. That's it. It's as simple as that. Trying to keep my size down right now, trying to keep my trading activity low. The volume is light. People are taking time off right now. We've got no news coming out until the next earnings cycle comes out. So that's how I'm playing it. I'm going to go into one search and I'm going to focus on the bearish side. I like the bearish side. I've given you lots of bullish picks over the course of the last 2 months. That's the other reason I'm giving you some bearish picks, is because you can take a look at any of those bullish picks. Those are all going to be decent. Amazon's good, Microsoft's good, Google's good. So on any given day, if you feel like trading the long side, you can certainly look to those stocks. They all look like they're in very good shape. So I'm going to go into Red Royal Flush. I'm going to go through the list right here. I've already gone through the list. Alibaba looks like a good short. JD, that's starting to lose its relative strength, similar to Alibaba's chart, where you've got horizontal was resistance, breakout, now support, breached that support, now resistance. It's got these major moving averages that it would have to move through, so no, that's not my short. Lyft is a short that I like. You can see nice, persistent, steady selling below the 200-day moving average. It's not too far away from that EMA 8. So I feel that Lyft is going to continue to be weak relative to the market. And if we get that nice, long, bearish engulfing candle somewhere in here, you're going to see Lyft continue to drift down, perhaps to this $12 support level, which was previous horizontal support. So on a $13.50 stock, that is a decent little move. You can just short the stock. That's going to work out fine for you. You don't have to buy any puts on it or anything. You can just short the stock. So that's what I've got for you this week. I wish I had a lot of exciting picks for you. I wish I had an exciting backdrop to paint for you as far as what the market's doing. I don't see it. And when conditions get like this, these are the summer doldrums. This is when you have to reduce your trade size. You have to reduce your trade count. These are low probability trading environments. And this is the biggest mistake that most traders make, is they try and force trades when they've got a low probability trading environment and they are trying to make it happen. They're trying to make it happen. And if they're not trading, they feel like they're not doing their job. Well, the fact of the matter is you are pissing all of your capital away, all of your hard-earned money that you made in here. You are just pissing away every day. And when you finally do get that market dip and that next really good buying opportunity sets up for you, you're going to have a lot less capital to work with. So please take my advice. Keep your trades minimal. Keep your trade count down. Keep your size small. Take time off if you can. This is a really good time of year to take some vacation time. There's nothing going on in the market. And then if you're on vacation and you happen to see a dip, you might want to think, I'm going to go back a day or two early. Now I finally have something worthy of trading. And then you can get back in when the market finds support and try and position yourself for that little bounce that we're likely to get. Thanks so much for watching, everyone. I'm not going to be doing a live event video this week, but I do plan on getting a weekly video out next Sunday, so I will look for you then. Thanks so much for watching. Trade well. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.